Well, hi there. Welcome to Markets Tomorrow right here on ET9, the Mumbai News Centre. I'm Tanveer Gill. And it was a down day for the markets. You saw selling pressure grip the markets once again and bring the index below the 75.50 mark. Now, it must be said that we are stepping into a truncated week. That's the coming week with Thursday, Friday off. So maybe there is a sense of stepping back and taking some money off the table after a splendid run for the markets in the month of March. So profit taking could have brought down the markets in the session today. That was the case with the broader markets as well. We'll talk about today's session with voices lined up on the show. Sridhar Sivaram, Investment Director at Enam Holdings, will talk about his investment ideas. Pasupati Advani will also highlight the same. Mayuresh Joshi will talk about his investment philosophy. And Sachidanand Uttekar will help our viewers approach trade tomorrow. He, of course, is the technical analyst at Motilal Oswal Securities. The top stories then, and sell-off resumes for the index and Nifty closes below 75.50. Call writers have been most active at 7,600 to 7,700 levels, which acts then as a resistance zone for the market. BHEL, that's the big stock story of the day. Strong order inflow seen in the flash results of Q4, despite the headline numbers not looking that impressive. In the meantime, Aptel denies a compensatory tariff, and that brought down interest in Tata Power and Adani Power. In fact, both those stocks kind of retraced in the session today. Other than that, in a big ET9 exclusive, Liberty House is expected to bid for Tata's assets in the United Kingdom. We had Liberty House speak exclusively to the channel, talk about their plans, why they're getting into the business, what's the prospect of expansion that they see for the UK steel industry. But more importantly, this would be a shot in the arm for Tata Steel as it looks to offload a pain point on its balance sheet, assets which have not paid off over the course of the last 8 years since the acquisition of Chorus. And so Tata Steel was one stock in focus as well, drawing investor interest in the session. Sugar stocks saw some profit taking in trade after the run-up they witnessed in the month of March. The question that we are asking then, just about stepping into earnings season, will the Nifty fall further before we hit the earnings corner, the Q4 earnings corner for FY16? And Mayuresh as well as Sachidanand, good evening to both of you. We will address this very subject with both of you. First, on the fundamentals, do you think the market is getting a bit iffy, Mayuresh, ahead of earnings, or is it just simply profit taking?
Good evening, Tanveer. Now, if you look at the market structure at this point of time, the markets are clearly just stating a weak set of numbers to come through across sectors, specifically in the banking industry, specifically in top-tier IT names. You're probably looking at even construction stroke infra being under some sort of stress. Having said that, again, I think the large picture is when the earnings recovery will happen, and I think the consensus is getting built up. But in the second half, you might have some of respite come through, along with capex picking up. But again, I think that's a larger picture in the medium-term perspective. From a short-term perspective, I think the earnings will still remain under stress. What happens with the parliamentary session to begin over the next few weeks, I think that will be a key determining trend in terms of whether some key bills that are languishing are expected to get through. So I think markets are looking out for all these factors. Until that point of time, a large part of gestation in terms of weak earnings are built into the markets. But if specific earnings are extremely bad, I think those stocks might get hammered once the results are out.
Okay, Sachidanand, how are you looking at the market in terms of pure levels right now?
Well, good evening. So far, we have already seen a strong run-up in the Nifty, where the series of higher tops and higher bottoms was maintained till yesterday. Now, today is the first day wherein Nifty has closed below its previous swing low, and this is marking as a distortion of this particular sequence. 7580 was a remarkable level and a very significant one, and this is the first time that we have closed below it. So what we expect is a minor state of profit booking after such a stupendous rally, but the correction that is due may not be beyond the extent of around 7400. So what we are expecting is just a corrective after an impulse that we have seen in the market in the last one and a half month, and this particular correction could be to a tune of around 7,400. If you look at the broader structure, I think the way Nifty is, the index has been shaping, what we expect is that this particular correction would be a very healthy one, and going forward it will give us an opportunity to create long positions for the upside.
Okay, fair enough. Thanks for that perspective. The big story, stock story of the session was BHEL with their flash earnings reflecting that there has been a pickup in order inflow over quarter 4 of FY16, and that was encouraging for the stock. It was a top gainer on the Nifty. Avan joins in to break down the numbers and assess the trend. Avan?
Well, the flash results for BHEL for FY16 were delivered, which broadly gives a sense as to how Q4 is likely to shape up. Now, in terms of revenues, it came pretty much in line with expectations at 26,700 crore rupees. That's versus 30,147 crore rupees. The net loss, though, widened. 880 crores almost is what they delivered versus expectations of a loss of almost 600 crore rupees. And that's largely on account of the low margin orders as well as the execution pace, which has remained muted. Remember, there have been very slow moving orders and lack of operating leverage due to the high fixed cost base that resulted in a lower profit this time around. We didn't have the margin picture which came about, but what was the big surprise and the reason that the stock performed the way it did was a steady order inflow at 43,727 crore rupees, and that was largely led from orders from Telangana as well as Tamil Nadu, which means that the total order book stands at about 1.1 lakh crore rupees. Although there is a bit of a concern from analysts that over 30% of the order book is from slow or non-moving orders. So now the expectation is that net profit could be around 396 crores in the fourth quarter, with revenues expected at about 11,077 crore rupees.
Thanks, Avan, for that. We'll talk about BHEL in just a bit, but also in focus was the Aptel order on the power sector. The CERC cannot modify tariff is what they said. And you had Tata Power pull back on the back of that news, Yatin?
Well, if you look at the entire Aptel order, clearly Aptel is clear in mind that the Central Commission for Electricity Regulation is not, entitled to, modify the compensatory tariffs or any kind of tariffs. So CERC basically cannot grant compensatory tariffs. Neither does it have a right to grant the compensatory tariff under various clauses. But now what Aptel also ruled, and what we understood from the interaction with the Tata Power's management, is that going forward, Aptel also directed CERC to calculate the compensatory tariff under a separate clause, and this will be done within a period of 3 months, and then CERC will get back to Aptel with the new compensatory tariff structure under a new clause, and possibly that will work out similarly what the previous CERC order was. There was some technicality in the entire order because of which CERC has been asked to recalculate the compensatory tariffs, and the petition needs to be filed under separate clauses versus the force majeure clause in which the compensatory tariff was not allowed. So basically the old order is set aside and a new fresh order will be issued by CERC for the compensatory tariff, which will be similar to the previous order, which means that Adani Power and Tata Power, once the order is finalized by CERC or the compensatory tariff is finalized, would be something on the positive side, and that is the reason why the Tata Power management indicated that the entire compensatory tariff order by Aptel is in favor of the company. Of course, it will take 3 months for CERC to pronounce a new compensatory tariff under various other legal clauses.
Thanks, Yatin, for that. Talk about some of the other key movers in the session. Really, HDFC comes to mind. That stock also lost about nearly 3%. Growth concerns weighing in on increasing competition in the space that they operate in, which is housing loans and infrastructure loans as well. Plus that disclosure made by the management to the exchanges, where they made an additional provision this quarter around of about 450 crores. On a voluntary basis, outside of the ambit of regulatory requirements, to address one of the accounts that perhaps may not pay up from a bad loan situation. Let's talk about all these developing stories one by one. Mayuresh, first the call on BHEL. Is it a turning point?
No, clearly, which it drifted down, there has been significant improvement, and with the kind of order flows that the company has witnessed in Q4, it is a significant positive trend for the company. However, the larger picture, as Avan was mentioning, still remains a little bit on the tepid side. 32% of the orders are slow moving, 23% of the orders of the overall outstanding order book are EPC orders, which are low margin orders. And again, largely if you look at the L1 status of BHEL over FY 17 and 18, they've got around 10.3 gigawatts worth of orders as L1, and clearly in terms of order size coming through for the entire industry as a whole, it's expected to inch up from 6 to 7 gigawatts to around 15, 16. However, the capacity remains extremely strong in terms of competition pressure. The margin still remains extremely weak. Execution issues still will be a drag going forward. So our own take is that the stock might react positively if Q4 numbers, as the flash results that they announced, come in line. But over a longer period of time, I think the execution issues will still have a drag on their margins and return ratios.
Okay. Thanks for that, Mayuresh. HDFC on the charts first. Sajitanand?
Well, if you look at the immediate trend, we have seen that the stock had been underperforming since a long time. We have seen a smart correction in the stock, and the stock is almost coming to the retracement support now. A reversal is something that would be awaited. We are not looking at much more weakness in the stock. 1070, 1050 would be a good base for the stock from here on, and we expect the stock to again trend up. But so far as the immediate trend is concerned, the trend has been down, but we are awaiting some kind of a reversal formation here.
Is it a book profit strategy for HDFC, Mayuresh? Just a bit. The other one I want to ask you about, Sachidanand, is Tata Steel. And amidst all the news flow with regards to their UK assets, the stock has been fairly strong. Today, of course, down 1.5%, but the monthly chart as well as the this year performance of Tata Steel has been in excess of 25%.
Well, absolutely, yes. We have seen that the entire metal pack has been outperforming the market, and for the last 1.5 months, we have seen a stupendous run in this particular counter. Even after the announcement, we have still not seen a major change in trend. The high top, high bottom sequence is still intact, and the stock has been trending well. We have seen weakness in today's session, but I think looking at the broader picture, we still see a scope for the stock to reach beyond the levels of around 345, 350. So far as the stock is trending well and above 310, we expect this particular sequence of higher tops and higher bottoms to continue.
All right, stay on with us, gentlemen. We'll head into a break. As we do so, hear out Sridhar Shivaram, Investment Director at Inam Holdings, is constructive on the markets and believes that government reforms will play out over the course of the next 12 to 18 months. He also highlights his sectoral bets.
A lot of it is priced in. I mean, I've been bearish for 18 months, and you had a price correction, you had a time correction. It isn't looking that bad now, but I'm not saying that this is like a bull market. You could possibly make, if earnings growth at 10%, you could possibly make 10-15. Oil marketing stocks and even the normal refining stocks, say Reliance or any of the other refining companies. So there is an opportunity here because the refining margins are strong right now. And the oil marketing companies are in a sweet spot right now because the government is following through on the reforms. So I think if you see, there are certain positive signals that we are getting, especially road sector surely. There is some pickup in infra and maybe very early signs of pickup in housing, very early. So at the margin, I would say that we have seen very poor cement volume growth over the last maybe 12 months. I think we're just seeing signs of turnaround. These are early signs. We've seen some of these early signs in the past also for 1 or 2 months, and then they fizzle off. So I think if we have to take a view that what this government is doing is right, maybe a bit slow, but they're on the right track. then this would eventually play through. I think auto ancillaries have had a huge run. So if we take the last 3-4 years, they've been multi-baggers. So they are facing multiple headwinds right now. One is that the business itself seeing some sort of challenges. Some are stock specific, some are sector specific. And the other is that the valuations had gone to maybe slightly dizzy heights, which is we're seeing both correcting right now. But if you take a 3-4 year call from here, it's possible that they will still give you reasonable returns.
Welcome back. You're still watching Markets Tomorrow right here on ET Now. We're still in conversation with Mayuresh Joshi as well as Sachidanand Uttekar. And, we're going to be looking at tomorrow's session very closely. Last day of trade before we hit the earnings season. And even that, the first week would be truncated. So remains to be seen how the market takes to the performance. But let's talk about some of the key themes, Mayuresh, that you'll be watching out for, or key stock stories in the wake of earnings that are on your radar.
As I mentioned earlier, Tanveer, the banking stocks are expected to stay under pressure at least for this quarter. Add to that, infrastructure, construction will remain under some amount of stress, both because of execution issues as well as tepid order flows coming through. I think the exception of BHEL in terms of influx of orders might be a one-off. But clearly, I think consumption as a theme is something that I'll be keenly watching out for. The volume growth across stocks will be keenly watched out for, because a lot of price cuts have got initiated, which will drive volume growth up. The benign cost conditions will ensure that the gross margin expansions happens, and that trickle-down effect happens to the bottom line. So clearly, consumption as a story is something to be looked out for, along with key auto ancillary stocks, because if monsoons are good and the 7th Pay Commission recommendations come through over the next few months, you can expect some amount of uptake in terms of how the volumes will pan out for a lot of these rural-driven plays, specifically in the auto ancillary industry.
Okay, fair enough. Sachidanand, how would you advise viewers to approach trade tomorrow in terms of your strategies?
Well, as we discussed, Nifty has closed below the 75-80 mark for the first time, and the sequence or the momentum that we were seeing in the market on the upside has been stalled. So we expect particular weakness to persist in the coming session, and which could be carried forward in the coming week as well. We expect markets to drift lower towards the levels of around 7450, 7400. But we would like to play this particular bearish move via some of the bearish sectors wherein there has been a relative underperformance. Media is one particular sector wherein we have seen clearly underperformance in last couple of months, and Z Limited is still on the weaker side. Post the double top formation, the stock has been finding it very difficult to maintain its highs above 395 levels. It has been acting as a very good supply zone for the stock. So we expect the stock to again fall down to levels around 370 or maybe lower, and the stock can be participated on the short side with the stop loss at around with the stop loss at around 391. The second stock on the sell side is from the pharma space. We have already seen that the entire pharma pack has been going through a lot of difficult times. If you look at Cadila Healthcare, where we have already seen a kind of a bearish structure, we have a continuation pattern again pointing towards weakness. We expect the stock to fall down towards the level of 295, and stop loss can be placed around 325 for fresh short positions.
Okay, Sachidanand as well as Mayuresh, thanks very much for taking out the time to speak with us and sharing with us your thoughts on the market, your investment, as well as trading ideas to approach trade tomorrow. Last trading day for this week. We wind up the show on that note. As we do so, here are Paspati Advani on his bets in the market, investment ideas. He likes mid-cap banks and cement stocks, again mid-tier cement names. Those are his high conviction calls.
From the investor's perspective, it's good because they're stopping losses. They're stemming the losses. The difficulty is that, having made Tata into a brand name, it's going to have backlash on all the other companies. It's really a function of the fact that holidays are coming, the flights are going full, prices of tickets seem to be going up. So it's just a perception that the revenues are better. And I think that is what's driving the sector. 520, as you said, either it's going to shut and therefore it's good for Jet and Indigo. Or they're going to liberalize it, and the others are not really listed. We are betting that India is going to continue to grow. We are betting that the infrastructure is going to come. The cement stocks have got hammered, particularly the mid-cap cements. So it is a time to look at them and buy some value picks. What I'm seeing in the power space is obviously some consolidation and what I would say a more level playing field in terms of pricing and distribution. And I think that there has been some change in the government in terms of policy and the regulatory framework.